Hey, my name's James Nicholson and welcome to my YouTube channel. Now today we want to talk about this week's interest rate rise. They're expected to skyrocket. What does that mean for us as investors? What does it mean for you as a homeowner? Make sure you watch this video to the end because we're going to cover all of that and deep dive into the impact of this week's interest rate rise once it arrives. Now, before you jump into the content here, make sure if you haven't done already, please smash that subscribe button over there and hit the bell notification. We're on the way to 7,000 subscribers now. We're just about to jump into August and we want to hit 100,000 views this month. So how can you help me hit those views? Smash that like button there, guys. That'll take you 2 seconds. Go on, smash that like button. That helps YouTube get more eyeballs on our content and I would really appreciate that and help us get this 100,000 views this month. So, what is going on? Well, inflation is still here, unfortunately. And what we're seeing is other countries have dealt with inflation, or inflation has dealt with itself that little bit better. You see, in the USA, inflation is at 3%. In most of the EU, it's at 5%. In sunny old Britain, or not so sunny, but in England and UK, in Britain at the moment, we're at 7.9%. Now, that means that when the Bank of England meets this Thursday, they really don't have any other option but to increase interest rates. But how much are we looking at? What are we expecting to happen this Thursday? Well, first off, inflation isn't moving, right, as quickly as it could. We've been at 10% for a while, then we went to 8%, and that stuck there for a while, didn't it? And we were expected to go to 8.2. We didn't. We stuck at 8.9 for a while. Then we had a bit more of a drop than we were expecting this month, and we got to 7.9. Now, America is at a 3% inflation, and they still are putting their interest rates up. Now, they had a pause. They did have a temporary pause last month, but this month they've gone back in and they're at around 5.5% now. From memory, I think that's what it is. It's around 5.5% in the USA now. Now, the UK interest rate, the base rate, is sitting at 5%. And we need to make sure that we get inflation down. Now, what most economists are predicting will happen this week is not a huge jump because we got better inflation data than we were hoping. And most people are saying we're going to go up 0.25%, right? Most places are saying 0.25%. Now, the problem that you've got with these interest rate rises is they don't necessarily curb spending straight away. And this, for me, I look at it and I feel, why do we need to keep raising interest rates? Because things are getting better, inflation is coming down, and putting the rates up to 5%, 6%, 7%, a lot of people are on fixed term mortgages. And so their payments aren't going to go up straight away. It's going to take another 6 months, 7 months, 8 months, a year until this starts impacting. And by then, inflation will probably be curbed anyway, because inflation has to curb itself because it is not really rising anymore. And what we're seeing is eventually you will get to a point where the last year's inflation falls off, and that's what we're expecting to happen at the end of this year, that inflation will start to slow down significantly. So where we've got inflation at the moment is supply side. We can't control that. So what I mean by that is things like gas, electric, petrol, fuel. You can't control that. And that is the energy crisis that is really putting prices up, because energy is used for everything. Food is one of the biggest problems with inflation at the moment, and that's because it costs more to transport, it costs more to cook, it costs more to keep it cool, because of the energy crisis. So the government should be looking at what else could they do. Now, to be fair, I'm not massively a political person, but what is happening is the Conservatives are looking at policies that aren't going to be very popular with a lot of people. So we're looking to open the oil rigs again. That was being talked about today. We're looking to delay the EPC, which is the energy performance certificates landlords have to have in place. We've got no date on that now. We had a 2025 deadline, we then had a 2028 deadline, and now it's pretty much been scrapped with no deadline at all. Now that could change under Labour, but there's a lot of policies that the Conservatives are looking at that potentially might help, but maybe not fast enough. And so this will start to impact about 1 million people that are going to come off of a fixed rate deal this year. Those people will then have to fix at considerably higher rates. Now, there are other economists as well saying that we might go up 0.5%. And so the 0.5% theory is that let's just crush the economy, let's just crush this inflation, stop messing around, because if we go up 0.25%, we're also looking at another quarter in September. So some economists are saying, just go the full half now, just get it done, rip the plaster off, and try and get that inflation down that little bit faster, because if you do that, then we can start looking at levelling out and then moving our economy forward and getting back on track. Now, this is something that is less likely, and most people are feeling that we're going to get 0.25% this month. What do you think though? Where do you think that we're going to ultimately end up at the end of this interest rate cycle? A lot of people are saying now that potentially, this is where I feel it's going to go. I feel that we're going to have 0.25% this month, 0.25% next month, and I think in October we will have a pause. The Fed did that, and so they're slightly ahead of us. We often follow the Fed. I don't think our inflation will be below 5% by Christmas, as Rishi Sunak expects, but I'm not an economist. I don't know anything, but this is just where I feel it's going. I do read a lot about this stuff, and so the point of these videos is really to think about how does this impact us as property investors. Well, look, just because the interest rate, base rate rises, mortgage companies now are looking like that they feel we're near the peak, because in fact, HSBC last week, they reduced some of their interest rates, not a lot, which some of you would have clearly said in the comments. It wasn't a lot, but it was a marginal decrease because they want to get lending going again. Right now, buyers are scarce. There are not lots of buyers in the market. I'm trying to negotiate a deal at the moment in Dorking. It's an off-market deal, so I'm dealing direct to vendor. And it's someone that was looking for 160 for a property. Then we talked about 140. And I said, no, I'm not looking at that. They come back to me today with 120. My goal, though, is to get it on something called a lease option, because what I want to do is secure that property today, allow the volatility in the market to play out, and then complete on that property in around 7 years from now, allowing the market to recover. That's my goal here, is to really focus on getting that sort of deal structured and moving forward if I can. And that's a great option. That could be a real winner for me. So that's what we're looking at right now. And so there are people in the market that, because of all what's going on, are looking at deals, are looking at offers, and that's what you've got to be looking for as an investor. Anyway, I think we've covered enough in this video. So interest rates, they're going to go up this week. What I want to know from you in the comments is how much. Get involved in the community, get involved in the comments. I personally reply to all comments. Sometimes I'm up at 11 o'clock at night replying to you guys. Do like the video if you didn't already. Is it going to be 0.25%? Is it going to be 0.5%? What impact's that going to have on property? Check out all the other content on my channel as well, including this video right here.